So now that we know all the market makers' tools and objectives, I guess the question becomes, damn, what chance do I have, right? It's probably a thought going through your head right now. Well, the answer is a lot, really. You have a lot of choices. You only really need to make one choice. All you have to focus on is understanding how the market maker sets up their moves and what's going on. To beat the market maker, you just have to know what they're capable of doing. Market makers manage risk against open positions. You're in business to make money as a trader, but they're in business to make money as a dealer. In order to trade the right way, you have to be in line with the dealer. This is what is going to give you a major edge. If you can identify their behavior, then you can follow what they're doing. So the 3 rules to beat the market maker are: number 1, understand how to read the moves. Number 2, anticipate how the market maker will present. And then number 3, trade in line with the market maker. This is not a game or a hobby. The dealer is waiting for us to make an uneducated or emotional decision, to be over leveraged, to change our stop loss, to add capital to a bad position, etc. They know they can entice you to do all of that stuff. Let me give you a very brief overview of how the market maker sets up their moves. Again, there is a lot more detail coming on this throughout the course, but this is just like, think of it as a 1-page outline to get started, I guess. So trap moves are made at the beginning of the week, Sunday, Monday, depending on where you are in the world. At TTC, we call it Fake Move Monday, but that's not actually entirely correct. It's really called Fake Move Week Beginning, or FMWB for short. The goal here is to jam you up and hold you in an open position. Now, if you get to know this method really well, sometimes you'll be able to trade the false move, as it can present as a 1-day trend and a pretty good day trade on the daily setup. However, the trap comes in not taking profit on that 1-day move, because often the true trend starts on Tuesday. If you know this method, you won't be trapped, but retail will be, because retail are notorious for not taking profits. In Forex, the false move usually is made around the UK and the US open. But in crypto, I find it's usually made very close to market open, Sunday, 5 p.m. New York, sometimes before it, sometimes after. And then the real trend, if not Tuesday, it can actually start Monday during UK or US, especially if Asia has run a trend that day, which is not their typical behavior. At the beginning of each trading day, the market maker creates the spread. So expect price to just go sideways during Asia. UK's typical behavior is to run a trend. Therefore, if you can identify that trend early in the week after the fake move week beginning, that's where you'll get your first 3-day swing entry. And then you can hold that for 3 days or 3 levels, taking profit at midweek reversal. At midweek reversal, which usually lines up with a news event, you'll bag flip, as we call it at TTC, or if you're extra special, we call it the Colombian bag flip, which essentially means just take profit on your open trade and open a new trade in the opposite direction. The end of the week is Friday, and on Fridays, aggressive moves will be made. These will form the trap before the market closes, leaving you jammed in consolidation all weekend. For this reason, it's best to take profit on your 3-day swing trades when the peak is formed throughout the Friday UK session. Now let's see how all of that looks on a chart. So what you're looking at here, this is the weekend trap. See how price just went sideways in consolidation for the whole weekend? That's the weekend trap. Usually towards the end, we will get a stop hunt move, which is what you can see here, this little tiny break above the weekend consolidation. And the reason that they do that is because during this whole weekend, when price went sideways and did absolutely nothing, people got bored, which is part of one of the market maker's objectives, right? Bore you into a position. So they got bored and they just guessed. And so there'll be a lot of people that convince themselves that from here, because we're going sideways, maybe if you learn traditional technical analysis, this may have been a resistance line, and they may have convinced themselves, oh, price can't break the resistance, we're definitely going down. So they open a short position somewhere in this consolidation, and because that right there is the peak, the last peak where it wicked to, they put their stop loss just a tiny bit above that wick, and then come close to the market's opening. All they need is a small little spike that goes above this wick, and they've wiped out anyone who shorted over the weekend. So this then goes into the fake move Monday, which we can see was the move to the downside. Then in this little box here, on this particular occasion, they started the true trend in UK session on the Monday. So remember I said to you, sometimes a true trend can start on the Monday after if Asia has run a trend. So Asia ran a trend this day, the true trend started Monday UK, and we went for day 1 to the upside, day 2 to the upside, day 3 to the upside. Then from here, we had this reversal, which becomes day 1 of the midweek reversal and starts the move to the downside. So we have day 1 to the downside, day 2 to the downside, day 3 to the downside. And then in this little section here, what's actually happening is UK started by moving the price up, then they ran a trend back against that move, then they finished the session up. That's the Friday trap. right? So that's basically a very typical week. For now, you just need to know when these things happen. Don't worry if you don't know the session times. Don't worry about converting it to your time zone. Just start watching some charts and see if you can identify a false move at the start of the week. A trend form on Tuesday, that trend change somewhere in the middle of the week, then aggressive price action on Fridays. That's it. That's all I want you to watch between now and your next lesson. It's also important to note that what I just described to you is a typical week. Not all weeks will be the same, because if it were, retail would figure it out. Market maker will shift the behavior in sessions. They will use news as the excuse to help them reach their targets, and sometimes they'll even turn the 3-day swing into a 1-week trend, followed by a trend range in the next week. Your job is to identify when the market maker is shifting the typical behavior and reacting to that. They're not going to make it easy for you. If anyone tells you trading is simple, they're lying to you. It is very, very hard before it gets easy, no matter what strategy you're learning. Maybe they just forgot their journey. But you look at this and in hindsight, you probably think, oh yeah, that's easy enough, but don't be fooled, it's not. You look at that now, you go, oh yeah, weekend sideways, fake move down, up for 3 days down. Yeah, no worries, I got this, right? It does look that easy in hindsight, but in reality, it's not. Like all other trading strategies, this one will take time to master. And if you don't complete your apprenticeship on the weekly setup or the 3-day swing trade first, before you even attempt the other parts of this method, you're only hurting your own chances of success. So what is an apprenticeship? It's sticking with the one method for a minimum of 6 months or 50 trades so that you can collate enough data to know if this is the method for you. Meaning only trading the weekly setup for the next 6 months or 50 trades, which 50 trades at 2 trades per week per asset on this method is 6 months anyway.